Hello, everyone. Welcome to the weekly roundup. Today, we will cover possible trade agreements, inflation, and earnings releases. Hello, Ben.
Hi, Eva.
How's it going?
Going good. Sun shining. Happy day.
When the sun is out, is a happy day.
It always is, right?
So, we're going to pick up from last week's meeting when President Trump and the Chinese president had that meeting.
hmm
Did anything material actually come out of it? And also with talks between the Chinese president and Putin also revived, where are all these geopolitical dynamics headed?
Well, I should have paid more attention into political science when I was doing that. No, it's become very interesting, unique dynamic. I mean, President Trump and Xi are friends and not friends, and so that meeting, I think, was, I mean, good from a perspective that you show that they're going to continue to try to work together. It's hard to think that President Xi thinks that he can trust Trump. I don't think that's not the case. A lot of the actions that the U.S. have made this year, attacking Venezuela and then Iran, has an immediate negative impact effect on China. And so I think that it's coming into the meetings, they're a little bit hostile, at least externally. And I think because there wasn't any, again, they came out with a united front. Did anything happen? I think the answer is no. I think that President Xi effectively said that Taiwan continues to be the most important thing that they want to protect in their part of the world. Both seem to say they want the Iran conflict to go away, but that's, I mean, I think you neither here nor there for either of them at this point. And I think that it was a decent meeting from that perspective, but the reason Taiwan continues to be a major piece is because China still refers to it as part of their country, and the rest of the world thinks the other. So, that's a real big piece. All of the major semiconductors can continue to come out of Taiwan, and if we don't have semiconductors, we don't have anything. We don't have this. We don't have any kind of conversation. Semiconductors go into everything we use on a daily basis. So that continued to be the focus. And then your second question about Putin and Xi, look, they're friends, I'd say, actual friends. And they're in a difficult world where they're looking to really kind of support each other. I think Russian oil is flowing to China as quickly as it can do to try to meet up with the shortfall, if there is a shortfall. So I think that their relationship is dynamic and continue to evolve, and they are two friendlies, I guess, in a world of dictators.
Friends.
They're
That is
friends.
interesting. So, moving on to inflation, that seems to be coming back into focus, and there's an increasing discussion that the Fed could be behind the curve and may need to hike again. How do you see this playing out?
So I think that's probably the biggest risk in the world today is that, if we have like what this conflict is shaping up is a bit like Ukraine, Russia. Now that's years in the making. But because that was a smaller conflict that didn't affect as much of the world's oil energy supply, that has moderated and worked and, higher like potash costs and fertilizer and things like that from the Ukraine-Russia conflict. The risk at this point, to your question, is inflation, really. And if this sustains and we enter a year, 2 years of this conflict, then inflation is going to be a real challenge. But what will happen in that backdrop is right now what we have is we already had a slowing economy coming into this. And now if we have an inflation pressure to the upside, as we talked about maybe 2 months ago, worst case scenario is stagflation, slowing economy, rising inflation. That's something that gives central bankers nightmares because what do they do in that environment? Because probably unemployment is rising and probably inflation is rising at the same time. that really, really is negative for the consumer and the average individual. So I'd say that's the key risk. Market isn't really pricing it in either, and that's probably another one. I think one of the comments I made earlier this week in one of the dailies is that, China, which has been going through a massive period of deflation, might actually start to see some inflation. And in China's case, it's probably a positive on the inflation side of things. It's going to help with profitability, with margins, probably raises asset prices as well in that inflationary period. But I'd say the rest of the world is certainly worried about inflation. Presently, the market says it's transitory, and that it's temporary. But if this lasts another 3 to 6 months, then inflation is going to be an issue that the governments are going to have to tackle because the central banks can't do it.
Yeah. So my last question, earnings season got a little more interested with the NVIDIA's results. NVIDIA is the poster child for the AI-driven market rally. So what did the numbers tell us, and what should investors be looking out for?
Mean, NVIDIA, to your point, is really the company that's led this way. They'd come up with a chip and a processing system that was built for gaming, and they were kind of ahead of everybody else as a result of this. And then AI took off, and they've really been I'd say the leader in the space, the innovator in this space. Their earnings came out last night. They were fantastic. And even their forward guidance was good. But it shows how sensitive the market is to that. We were down, we were up, and effectively the market's kind of said ho hum. As I look here today, Nasdaq's down a bit, so some of those semis are down on the back of this. I think it's an important one to pay attention to and watch. As I've said the last few weeks, we're in some kind of, I would say, tech run-up bubble. Will it continue and for how long? NVIDIA's reporting tends to give you a sense that they're looking to evolve a little bit. And Jensen, who has founded and started the company, is a bit of a wizard from the point of view is that now we're starting to shift some of our landmarks, how we report, where the data comes from, what's important to watch. And so their earnings number was a bit different from the perspective is they didn't use the same landmarks they've used for the last many quarters. So that'll be worth digging into and seeing what the other tech companies do.
Okay, let's see the charts.
Okay, so this is we are recording on around 1 o'clock on Thursday, May 21st, not the 20th. I set this up yesterday, so the 21st. Should yes, say anything happen between now and next week, then we'll certainly comment on it then. So, first chart is the world, a shock that goes beyond crude oil. So, I think this is important to think about, and some of this hits home to your questions, Eva, just around what are some of the risks and what we're seeing with NVIDIA and some of the other companies. One of the critical middle materials that goes into semiconductors is helium. And so helium does flow through the strait. And if we're seeing a reduction in helium moving through, then that's going to have a negative impact. And again, it depends on how long this lasts. It's actually lasted a bit longer than I think the market would have initially priced in. The other ones, energy products, so crude and LNG, which is natural gas, also negatively impacted. The fertilizers, so all of those sulfur, ammonia, and urea, those are all fertilizer components, which won't hit this growing season, but if this lasts continued further, that's going to hit next growing season, which is a risk to inflation at that point. So, and the other petrochemical products, these again go into most of the products that we use on a daily basis in the world. So a lot of these things, there was some supply, but not a ton of supply because a lot of companies had moved to a kind of real-time delivery. Had this happened maybe 2020, I'd say it would have been a worse situation. But since we've moved to a little bit more of having backlog and inventory in the systems, that it's taking a bit longer to flow through into prices and such. But if this lasts multi months, I'd say even 3 months, it's going to have a negative drag on the economy and in turn have some pressure to the upside with inflation. Next chart. U.S. surge in imports driven by AI related categories. This is a dramatic change. And so if we look at the blue line, so the blue line would be segments the most exposed to AI. So this would be computers, computer accessories, semiconductors, telecommunications equipment. We've seen a vertical move in that. And then the other segments, which would be everything else in the economy, we've seen a material dip in that. And typically we see this kind of dip when we're in a recessionary environment. So this is a recession of 2020 and this is 2008 and then the 2001 recession. So we haven't seen this type of divergence before. And the optimists or the bulls will say on the AI side would say this is natural and normal, that we're seeing a material change in systems and businesses, and we're going to continue to see this divergence. Me, on the other hand, I do ultimately think that we get some kind of closing. The alligator's closed to some extent, and we've stretched to the upside. But the question is, how far do we stretch to the upside? But this is a huge divergence now that I think we need to be conscious of. And if the world is truly different, is it really different this time? I think we're going to find out very shortly. Thought this was a great chart. U.S. households increasing exposure to stock market fluctuations. And so, this is interesting to think about from a perspective of, so this is directly and indirectly held corporate equities as a percentage of total household assets. And so if we look on the left-hand ledger, this is the percentage. So we're somewhere around 33%, which is an all-time high, which makes sense given the market's at an all-time high. But the reason this is so important is that the economy becomes much more sensitive to this. If you look at the Chinese stock market, for example, that makes up a couple of percent of household net worth. So the stock market can go up and down all you want, doesn't necessarily have an impact on the economy. But if the stock market in the United States at this point has somewhat of a correction, a reasonably large correction, this will have a material drag on the economy. And this is a massive risk, which I think President Trump actually understands this number. But, this is a key piece that we need to think about from a perspective of the market now is tied to the economy and the economy is now tied to the market. And it's an important piece to think about when we're trying to risk manage in your portfolios. As always, the opinions expressed do not necessarily reflect those of National Bank Financial. I've prepared these with the best of my judgment. Everyone has their own risk tolerances. Anything we talk about at any time, please feel free to reach out to Eva or I, and we're happy to have a discussion, give you our feedback, and let you know if anything we discussed is appropriate for you.
Thank you, Ben.
You're welcome.
What's on the agenda for next week?
So lots of economic data next week in the US, a little bit in Canada as well. But on the US side, we're going to see effectively all the numbers that the central bank will be paying attention to, with Warsh coming up to his meeting next month into June. So a lot of the data there is going to be important from a perspective of what do we think about there. The other piece I'd be looking at is just follow through from here. So energy is super choppy. And I think that'll continue to be something that we need to pay attention to. Trump and Iran, and I should say US, I guess, and Iran are trying to come to an agreement. Effectively, yesterday, Trump said he was going to send the troops or send the guns or whatever he was going to do, something material. And then Iran said, well, let's have a discussion. Anyways, they're back and forth right now. And his last comments was, I will give you a few days to think about this. So I would expect if we don't see something over the weekend, then we'll see something next week. And if that fighting intensifies, then we could see some pressure on the market. If they come out Sunday night with an agreement that they will cease fire and move on, and here's the future, and you probably get a risk on rally and stocks start to move. And so I'd say those are the two pieces. Alongside that, we're seeing stocks hit all-time highs in certain areas. So certainly the Canadian financials are looking stretched. And so I'd be assessing if it makes sense to potentially try to de-risk some of those things. So really lots to cover as we head into the end of May. There's a big thinking sometimes, this theory where people say sell in May and go away. I guess we're going to see if that is legitimate this year or not.
That's a good one.
Yeah.
Thank you, everyone. Remember to visit, subscribe, and follow us on YouTube and LinkedIn at Hart Investment Group. The link to our daily financial heartbeats will be in the caption of the video or in your email box if you're subscribed. For our clients, please reach out to me if you have any questions or if you'd like to book a review meeting with Ben. Thank you once again for listening and enjoy the rest of your day. Bye.
Thanks, everybody. Bye.